About 87 points gone on the Nifty.
We broke yesterday's low by about 10 points or so, and we are right there at about 15,600.
84 points cut on the Nifty is what we are seeing, but there's a tad bit recovery from the lows.
Right before 1 o'clock, the market did break yesterday's low, but it's been in a holding pattern ever since. We're going to end with a 60-point cut, which means that from the lows, we're going to be off about 60 points as well.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Benchmarks close with cuts dragged by IT and metal stocks. Sensex ends in the red for the third straight session. Broader markets underperform benchmark indices. RBI tightens norms for securitization of debt, bars banks from undertaking such exercises for loans with less than 365 days maturity. The move could impact several NBFCs. State-owned lenders Bank of Baroda and Bank of India surge in bullish commentary from Morgan Stanley. The brokerage believes the two lenders offer the best relative risk-reward. Bank of India, Indian Bank and PNB hit fresh 52-week highs. Crude oil prices rebound after plunging by more than 3% as the implementation of sanctions on Russian seaborne crude oil eased concerns about oversupply. Meanwhile, metal stocks fall on softening metal prices as the market prices in hopes of further easing in China. Tata Steel, Hindalco and JSW Steel close with cuts. IRB Infra surges 2% on the back of robust traffic growth in November across all projects in all vehicle categories. Astra Microwave zooms 5% on its fundraise plan, while Bajaj Consumer gets a 2% boost on news of a likely buyback. Here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Rahul Singh of Tata Mutual Fund, and in Big Corporate Voices, we have Anil Singhvi, Executive Chairman of Sri Digvijay Cement, and Sunil Duggal of Vedanta. Today, we have a good mix of commodity news from crude to cement to steel and more. And to the action from the last street now, market ended the day in the red after Sensex fell for the third consecutive session. IT and metal stocks remained the major drag. Broader markets underperformed the benchmark indices. Prashant Nair is here with more details on the same. Prashant.
Well, the market did come up towards close. In the last 30 minutes, there was almost a 60-point rebound, and the Nifty finally ending about 50 points lower. Same kind of recovery, the Bank Nifty, not quite the same as Nifty, but to a lesser degree. The dollar rupee is a worry point, even as oil prices have come off, and this largely went unnoticed, but the rupee is lost. It lost heavily big today, and over the last 3 days, it has lost about 150 paise against the dollar. Something to watch out for. Globally facing sectors were under pressure. IT, metals and pharma. PSU banks as an index was higher, although, the big one, which is SBI, did not participate today. On the Nifty, losses coming through in names like Tata Steel, Dr. Reddy's, Hindalco, Infosys, TCS, Union Bank, Bank of India and UCO Bank were the PSU names, which were some of the top gainers that we had. Market breadth, of course, was more skewed towards declines. Varun Beverages, names like PB Fintech, Ease My Trip, Schaeffler, Persistent Systems, Lemon Tree, some of the losers in the broader mid-cap part of the universe. And gains coming through in a recent listing like 5-Star, which was, by the way, limit up 20%. Westlife was higher, LG Equipment, Equitas and Puravankara, some of the other gainers. There is, of course, the RBI policy tomorrow. I think more than the quantum of rate change, it's the change in stance, if there is one, which will be very closely watched by the market. And, of course, follow-through price action in the US after what we saw on Monday is something which will be important when we come back tomorrow. Back to you.
Oh, it will be. Prashant, thank you so much for joining us with all those updates. Let's begin with some exclusive market opinion. Laura Gerrits of Rodyor Global Advisors says she is optimistic about the long-term prospects of India. Meanwhile, Rahul Singh of Tata Mutual Fund says the valuation of new age companies has seen a reality check. Listen in.
One beautiful thing about the Indian market is it's broad. It's a broad, deep market. And so there's always opportunities in the market. It might not be Asian Paints today or Nestle India. It may be something else. But, you wait patiently. You have your list of companies you want to buy, and you just wait for some sort of opportunity, or something that gives you that opportunity to buy them. India is one of the rare markets, emerging markets allow you to do this, where you can build what we call umbrella valuations. The penetration rates in India are so low, you can apply it to almost any business in India with a good management team and just kind of let it do its compounding over time. If we look at PEs, they look high today, but if we look at market cap, versus the potential size of the economy, the companies still have a lot of potential to just grow and compound through the years. It was the only country in the world where there were expensive stocks where we didn't sell or take profit. And the reason is because I really believe this time around, that the tides are shifting. You're getting, movement of more business to India. You have the country investing in infrastructure and development. And so I'm really optimistic about the long-term prospects for India.
The cyclical recovery or in terms of the earnings, where we are seeing, everything coming together nicely, whether it's credit growth, the NIMs going up and the credit costs coming down, you couldn't ask for more. And some of the banks are available at early to mid-cycle valuations, not their full valuations or not their full valuations in the last up cycle. So I think there is room to go. The valuations have come down to levels where they are probably only 2x the value which were there in terms of the pre-COVID valuation. So yes, there seems to be some amount of reality check, and the valuation sensibilities have returned in this sector. So yes, we would look at it, but again, as I mentioned, we should not look at it as a pack. Each company has a very, very different business model, very different dynamics, very different ownerships in terms of the private equity. So we will have to take a call taking all these factors into account. And again, let's not forget that the interest rate scenario globally is also challenging for some of these stocks and the valuations to sustain.
All right, that is some expert opinion coming into the second headline now. RBI has tightened the norms for securitization of debt. Banks are now barred from undertaking such exercises for loans with less than 365 days maturity. The move could impact several NBFCs. Abhishek Kothari is here with those details. Abhishek.
Well, this is an additional point put in by RBI with respect to what kind of loans can get securitized by NBFCs to other lenders, especially the banks. So the stocks could be in focus are the NBFCs with lower duration of loans, the likes of MFI, that is microfinance, and gold financiers. RBI has made changes with respect to securitization process, wherein they have said that loans with residual maturity or loans which are overdue of a period of less than 1 year, that is 365 days, but have served about 3 months of general interest to the NBFC, cannot be securitized. So this can have an impact on the securitization volume. Remember that NBFCs largely do borrow from banks, so they do securitize their portfolio with respect to priority sector loan targets for the banks. So quality of loans securitized will improve over here, and also the fact that shorter duration loans may not be securitized, which could have a rippling effect, especially on the shorter duration books like the likes of microfinance as well as gold financiers. Back to you.
Abhishek, thank you so much for explaining that to us. So how does this impact the sector? We caught up with Ramesh Iyer, who's the Vice Chairman and Managing Director at Mahindra Financial Services, to find out. Listen in.
So, normally we run a 3-year book or so, 30 months book. And if 365 days maturity cannot be securitized, normally that's not the portfolio which is offered. Always the portfolio that gets offered is where 6 months maturity is over and balance you have more than 24, 30 months left. So I don't see that to be a major change.
Okay, let's stick with news from the Reserve Bank. The Monetary Policy Committee will announce its policy decision tomorrow. Ritu is standing by with the key expectations from the last policy of 2022.
The Reserve Bank of India's Monetary Policy Committee is widely expected to hike rates by 35 basis points in this policy and bring the repo rate to 6.25%, according to the majority of the respondents to our poll. Now, this will be the 5th consecutive rate hike by RBI, but the pace of the hikes is expected to be slower, with some moderation expected in inflation and signs of a slower growth. Now, as far as the peak repo rates are concerned, the respondents were divided between 6.25 or 6.5%, with some even expecting peak rates at 6.75% in this hiking cycle. The inflation forecast for the year is widely expected to be left unchanged, and similarly, the GDP forecast of 7% for FY23 is also unlikely to be tinkered with in this policy. Now to the stance, where Will they pivot or will they not is the question. Well, not yet, according to our poll, with half the respondents voting for the stance being retained at withdrawal of accommodation, with a third expecting some tweak in the wording of the stance only. So in terms of what the markets will be closely watching out for, well, the wording of the stance, of course, and the voting pattern also, because any disagreements between the members of the MPC will be a focus area, because it was evident from the last minutes of the meeting that two of the external MPC members, Dr. Ashima Goyal and Dr. Jayant Verma, are likely to vote for a smaller increase in the repo rate or no hike at all, and some view this as a sign that the rate hiking cycle is close to an end. The other focus will be the transmission of rates, because if you look at the data on your screen, while RBI has hiked rates by 190 basis points between Jan and November, bank lending rates have only gone up by 80 basis points, so the transmission is just about 42%. And when you compare this with other countries, transmission is near perfect in countries like the US, South Africa, Australia, even to an extent in Canada, Mexico as well, but India really lags behind with just 42% of the rate hike transmitted. So this is an important metric that the MPC will keep in mind.
Oh yes, and the big decision that is awaited tomorrow. Ritu, we'll keep coming to you for more updates on that. To the third headline today, state-owned lenders Bank of Baroda and Bank of India surged today on bullish commentary from Morgan Stanley. The brokerage believes the two lenders offer the best relative risk-reward. Bank of India, Indian Bank and PNB hit fresh 52-week highs as well. Nimesh Shah is here with more details on this. Nimesh.
So the entire PSU bank basket is buzzing in trade today after Morgan Stanley has raised not only the target price but the earning estimate as well as valuation multiples for most of the PSU bank stocks. Yes, the stocks have done well YTD, but Morgan Stanley expects strong performance to continue on the back of higher margins, sustained loan growth and improving operating leverage for the next few years. Within the PSU bank stocks, Morgan expects BOI and Bank of Baroda are the best placed in terms of risk reward. In fact, they expect the loan growth to be sustained and the credit cost to remain benign for the next few years. So they've raised the target price on most of the PSU bank stocks. On Canara Bank, well, they have an underweight rating on the stock. They've raised the target price on Canara Bank to 345 now versus 280 earlier. On Bank of Baroda, the target price is now raised to 220 versus 195 earlier. On Bank of India, they've raised the target price to 125 now versus the earlier target price of 95, and that's the reason why that's been a big outperformer today. And on Punjab National Bank, they have an equal weight stance, but even there, they've raised the target price now to 60 versus 40 earlier. So across the board on PSU banks, target price is raised, earnings multiples are raised, and earning estimates are raised by Morgan Stanley, and hence the entire basket is buzzing today.
Oh yes, it was buzzing in trade today. Nimesh, thank you so much for all those details. Time for a break now, but stay tuned. We'll be back in a bit with the other headlines.